Dear students, my name is Dr. Ajay Kumar Sharma and I am a university professor. From today, I am starting a new series that is cost accounting for cost and management accountants of India, intermediate students. So anyone who wants to learn cost accounting in a very simple and smooth manner, you can watch this video and you can share this video to your other friends also. So in cost accounting, normally, let us share that screen with you, then we can explain very well. I hope you can see this. So now this is the PDF, and this PDF is from the Institute of Cost and Management Accountants of India, intermediate student. And there are many chapters in the paper 10, that is cost. In this study material, I will be focusing only on numerical questions. Okay. For every chapter, I will cover some numerical questions in every class, so that you can learn all the numericals in a particular chapters. Regarding the theory, once we complete all the numericals, then we come back to the theoretical part. Okay. So as you can see, this is chapter number 2, study note number 2, decision making tools. Under this chapter, we have these many 10 subtopics. First one is marginal costing, determination of cost and profit under marginal costing, reality about marginal costing, techniques of marginal costing, differential cost analysis, difference between absorption costing and marginal costing, application of marginal costing in decision making, transfer pricing, objectives of intercompany transfer pricing, methods of transfer pricing. So let us see one by one what is this all about. So marginal costing. So what they are covering here, they just says that the cost of a product or a process can be ascertained using different methods of costing. Okay, cost using any of the following two techniques. So there are two techniques in cost accounting. One is called as absorption costing and the other is called marginal costing, right? So absorption costing. So they say under this method, the cost of the product is determined after considering the total cost. Here, in a nutshell, I can conclude this, that in absorption costing, when we are going to calculate the total cost of a product, or when we are going to find out the cost of a product, then we have to consider both total total cost, like fixed cost and variable cost. But in case of marginal costing, we simply ignore the fixed cost. In marginal costing, we are concentrating and we are just taking only marginal cost, that is variable cost. So fixed costs are ignored in case of marginal costing, but in case of absorption costing, we take both the cost. So as it is written here, both fixed and variable cost. Thus, this technique is also called as traditional or total costing. The variable costs are directly charged to the products, whereas the fixed costs are apportioned over different products on a suitable basis. So if there is a variable cost related to a particular product, then the entire variable cost will be charged to that product only. But as the other cost, that's fixed cost, it is common for different types of products produced in the factory. So it has to be divided on a rational basis over all the products. Okay. So now moving further, marginal costing. They say the marginal costing is the ascertainment of marginal cost and the effect on profit of changes in volume of type of output by differentiating between fixed cost and variable cost. So there we make a difference between marginal cost and fixed cost, right? So several other terms in use like direct costing. These are the different names: contributive costing, variable costing, comparative costing, and so on. So in marginal costing, basically, we are concentrating only on variable cost of the product. Okay. And for decision making purpose, we only consider variable cost and fixed costs are ignored. These are the theoretical part, and you can go through this. It is very simple. And please do not ignore all these points, because sometimes these questions are asked in 1 mark question, multiple choice. So now moving further, these are limitations. As I told you, I am concentrating on only on numerical portion. So they say determination of cost and profit under marginal costing. So this is marginal costing statement, cost and profit ascertainment. Okay, cost or profit statement under marginal costing. So what you can see is sales revenue on the, this is the format of calculating cost and calculating profit under the marginal costing. So you have to learn this properly. Okay, so uh, let me show you on this page. So what we call it marginal cost statement, right? So this format, everybody just keep in your mind, because this format will be used again and again whenever we are studying marginal costing. So this is particulars, amount. So first of all, we write sales. Now it can be sales, it can be selling price per unit also. It depends upon the information given to us. Sales, we write here the amount. From sales, we subtract all of our variable costs. If they have given you the different elements of variable cost, for example, material, labor, direct overhead, then we can write it separately here. If they have not given, they have given a single figure for variable cost, then we will write it. Then we will make a total here of all these variable cost. After that, we have to subtract the variable cost from the sales. And after subtraction, what we get here, it is called as contribution. Contribution. So this is called as contribution. So then after, from the contribution, we subtract fixed cost here. If we want to calculate our profit, how much profit we are making, so we have to subtract the fixed cost from the contribution. If they have given different elements of fixed cost also, we can write it separately. Otherwise, one single figure we will write for fixed cost. And then finally, we will get here our profit or loss. Fine. Now, here the important term here is contribution. In marginal costing, what is the meaning of contribution here? Contribution means that suppose I am a manufacturer and I am manufacturing a product, and as you know, in all the when we manufacture any product, certainly there will be some variable cost. Okay, variable cost. This variable cost is like material, labor, and overhead, right? So for producing 1 unit, this is for 1 unit, material is, for example, 10, labor is 5, and overheads are 3. So our total variable cost comes 18. Okay, so this is only variable cost. So this is our total variable cost. But total fixed cost of the entire factory, in the entire factory, not only this product, say for example, the name of this product is A. Okay, not only this particular A product is produced, there are other products also like B, C, D. And for all the product, total factory expenses or factory fixed cost comes fixed cost, okay, Altogether, it comes, say for example, 50,000. So I'm taking there the currency, maybe Indian currency, INR, rupees. Okay. So 50,000 is the total fixed cost. Now, see here, but when I am selling this product in the market, the selling price per unit comes, say for example, 25. Okay. So now let us prepare the marginal cost statement. So suppose I am selling only one unit. Selling price is 25. As you have seen previously, you can see here from selling price, we are subtracting the variable cost and we are getting the contribution, right? So same thing we are doing here also. Selling price 25. From selling price, I will subtract my variable cost. And as you see, our total variable cost is how much? 18. So 18, I subtract how much contribution I'm getting? I'm getting 7. So this is my contribution, right? So now, if suppose I subtract my fixed cost here, how much is my fixed cost? 50,000. What you will see? If you see this, it is very unusual condition or situation, because here if the businessman will see, look at this situation, he will certainly die or he will be admitted in hospital, because here you can see how much is loss. 50,000 minus 7, that much of loss is there, means 49,993. So this much of loss, 993, this much of loss is there, because contribution is only 7 and fixed cost is 50,000. No, that's why we are saying when we take decision in marginal costing, we just ignore fixed cost. Okay. What is the, why it is called as contribution? Okay. Here we are taking only example of one unit. So here, whether my product is profitable or not, if we want to see this, we have to concentrate on this contribution. As beautifully we have named it as contribution, because it is contributing 7 rupees for every one unit sold. If I am selling one unit, okay, I am getting 7 rupees as a contribution. And how much is my total fixed cost? My total fixed cost is 50,000. This 7, one you, after selling my one unit, I have covered my total variable cost. Okay. And this 7 rupees is left, and which is a contribution to cover my 50,000, total 50,000. Likewise, if I say sell 2 units, so I am contributing total 14. Like that, I am keep on selling, and one day I will cover my this fixed cost. When the entire fixed cost is covered, the next moment, the next unit will be definitely a pure profit to the company or to the business. I hope you understood why we call it as contribution. Okay. So moving on. So now let us discuss some of the important formulas of marginal costing. So once you have seen here what is the meaning of contribution and how we calculate profit or loss. So this particular, as you can see on your screen, this particular format is very important in the entire marginal costing, right? So first of all, selling price or sales. From that, we will minus our the whole variable cost, and we will get contribution. From contribution, we subtract fixed cost, and then we get our profit or loss, right? Only this particular format will help us in formulating all the formulas. So the very basic formula for marginal costing is break even point. Okay, BEP. So in exam, he can ask you regarding break-even point in terms of units or in terms of value. Okay. So if it is in units, so how we will calculate in units? Now, what is the meaning of break-even point? Break-even point is that point in the sales at which our we are not earning any profit or we are not losing any money. Means there is no profit, there is no loss. That situation is called as break-even point. Okay. So break-even point means our total sales are equal to total cost. Okay. So it means if you see this statement, how much total contribution we are getting. Okay. That total contribution is equal to your total fixed cost. That situation, at that moment, how many units we are selling, count that units, that unit is your break-even point in terms of units. Because if contribution, say for example, if it is 50,000, our fixed cost is also 50,000, it means we are earning zero profit and we are losing zero money. So at this point, we don't have any profit, we don't have any loss because we have covered all our fixed costs. So at this moment, how many units we are selling here, that those number of units are called as BEP in units. Okay. And the total sales value of those units is your BEP in values. This is concept. Now, if you go to formula wise, so it is like fixed cost, total fixed cost divided by contribution per unit. Okay, fine. Say, for example, in our case, in the above example, our total fixed cost is 50,000, and our contribution was how much? Our contribution was here 7. Okay, 7. So if we divide this by 7, we will get here how much we will get. Let us check. 50,000 divided by 7. So we are getting 7142.85. So units cannot be in fraction. So what we can say? 7143. So 7143 units. So if we are selling this much of units in our business, till this unit, 7143rd unit, at this unit, our all profits and losses will be zero. Means we are not having any loss, we are not having our any profit. Just after this, when we will sell 7144th unit, that time there will be a pure profit of 7 rupees because contribution is 7. Okay. So after that profit will start. Clear? Up to this point, there is no profit. If you want to calculate in terms BEP in terms of value or money or sales value, it is very simple. 7143, for example, these units are there. Just multiply this by the selling price per unit. Selling price per unit. So how much we have our selling price? Our selling price is 25. So if we multiply this, we'll get 7143 multiplied by 25. So we are getting 178,000, 178,575, 178,575, 178,575. Okay. So like this. There is another way of calculating BEP in value. For that, we need PV ratio. So first of all, let us understand what is the meaning of PV ratio. PV ratio full form is profit volume ratio. Okay. When you go through their study material, you will see PV ratio. You can just read that definition and you can understand the meaning. Here PV ratio, profit volume ratio. How it is calculated, profit volume ratio? It will be calculated with the help of this table only, where we have contribution. Thus, here formula is contribution per unit divided by selling price per unit multiply by 100. Okay, so in our example, how much our contribution is 7, total selling price is 25, multiply by 100, 25 4 ja 100, 28%. Okay, so our contribution or PV ratio is 28%. It simply says that if you have any sales, you just calculate 28% of that, directly you will get your contribution. So contribution means it is a percent, sorry, PV ratio means it is a percentage, okay, over selling price, which indicate that much of contribution you are earning. It means if you have 28% your PV ratio, it simply means that your variable cost would be 100 minus 28 is equal to 72%. Okay, so in your total sales value, 72% portion is your variable cost and 28% is your contribution. Okay, so if we have our PV ratio, then we can directly calculate our BEP in value, that is sales that is your total fixed cost divided by your PV ratio into 100. Okay, see, for example, in our case it was 50,000. Now we have calculated it is 28% into 100. Let us check how much it comes. 50,000 divided by 28 into 100. So how much it comes? 178,571. 178,571. 178,571. This is your contribution. Okay. So if we see here, BEP in value, and this also we have calculated BEP in value 178,571 here, and there you can see 178,575. The difference of 4 rupees is because of the decimal point. That's why we have to adjust it a little bit in case of decimal. Okay, so this is your BEP in terms of units and in terms of value. So now if we go further, then we have our margin of safety. Margin of safety, MOS it is called. The formula is very simple. Actual sales minus BEP sales. Okay, actual sales right now, how much sales we have and how much was our BEP sales. It means how much is the margin of safety, how much we are in safe zone, how much we are in profit area. So that area, that difference, because up to BEP there is no profit. After BEP only profit started, and right now we are making this much of sales. So how much profit we are making, or how much is the difference between that sales. So that is called as margin of safety. Okay. There is another formula for margin of safety. You can remember this also. Profit upon PV ratio. So if you divide your profit with PV ratio, your margin of safety will come. Understand? So these were some of the formulas. Rest of the formulas we will see as it will come on the way. Right? So let us go to our study material. As you can see, this is the format which I have explained just now to you. Sales revenue, then he has subtracted all the variable cost. He got here total product cost, that is only variable. Then he got contribution A minus B. A means sales, B means total variable cost. Then he has subtracted from that. He got what he got, product contribution margin. Here he got contribution margin, variable administrative, these are also variable. So this much of bifurcation is not needed. You can simply prepare your format as per the format I have given to you. And then finally he has subtracted the fixed cost and he got the profit or loss, right? So moving on, reality is about marginal costing. So you can read this. We are going to the only numerical portion. So as you can see here, he has given all the formulas here. What is profit, how we calculate our contribution and all these things. Moving on. So here one example, simple example he has given. For example, the following are three products with selling price and cost. It is given these are product A, B and C. So selling price of product is 100 and its variable cost is 50. So contribution will be 50, 100 minus 50, 150, 70, 80 is the contribution, like this here. Okay, in the above example, one can say that the product C is more profitable because the product which gave more contribution is considered as more profitable. Okay, so because it has more contribution, this because the product which has more contribution, it will recover its fixed cost very soon. This proposition of product having more contribution is more profitable is valid as long as there is no limitation on any other factors of production. In this context, factors of production means the factors that are responsible for producing. So we'll see it further. So right now you just listen that the product which has more contribution is considered more profitable unless other things are stable. Okay, say for example, if the fixed cost for all the three different products is same, okay, then or same means suppose these three products are sold in one manufactured in one factory where the total fixed cost is for example uh, 50,000. So obviously C product will be considered as more profitable because it is giving more contribution, right? It will help in recovering the fixed cost soon. Now next they came limiting factor or key factors. This we will also discuss. Limiting factor or key factor here, for example, I'll take you to that page and there I will try to explain here. It is called as key factor. Key factor. Okay. Key factor or limiting factor. So for example, I'm manufacturing certain item. In that I need material, I need labor, I need overhead, variable overheads. So these are my variable. Without these I cannot produce that item or that product. Say for example, I have material in a limited quantity. Material is in limited quantity, or you can say it is not available in much quantity from the market. So I have this becomes a very important factor for me. This becomes a very key factor for me because if material is not available, how I am going to produce my product, right? So what we are going to do is we have to carefully use this material, as well as we have to see that I should, whatever material I have, I should get a maximum contribution out of that. Okay, so that becomes key factor, the factor which is in short supply. Say for example, if labor is not available or labor is charging high, so it becomes key factor for me. Okay, so in such a situation, what we will do, we will calculate our contribution first normally as we are calculating. Say for example, I have A product and B product and C product. Okay, the selling price of A product is 20, here it is 25, here it is 30. Clear? Now, raw material, which is a limiting factor, okay, that is used here 2 kg for 1 unit. Here I am using 1.5 kg for 1 unit. Here it is, say for example, 3 kg in 1 unit, right? And raw material price is for 1 unit 2, 2, 2. Same raw material is used in all the 3 products, right? So this is the price. Now my labor charges are for 1 unit. Here it is, for example, 5. Here it is 7. Here it is 8. Now suppose these are my only 2, raw material and labor are my variable cost. Now what we will do here, if material is in short supply or it is a limiting factor, first of all we will calculate our normal contribution as we are calculating. So what we will do, we will prepare marginal cost statement. So selling price was 20, 25, 30. So raw material, now this is my variable cost. Okay, raw material, how much raw material I am using in product A? 2 kg. 2 kg means per unit cost is, per kg cost is 2 rupees. So 2 to the 4. So for 4 rupees I am using raw material for product A. In case of product B, 1.5 into 2, how much it is? It is 3. And here it is 6. So this is the total raw material cost. How much is labor? Labor, you can see it is 5, 7, and 8. So how much is my total variable cost? In case of product A, my total variable cost is 9. Here my total variable cost is 10. Here my total variable cost is 14. So if it is a variable cost, how much contribution I am getting? I am getting a contribution of here 11, here 15, here how much I am getting here 16. If you see these, simply this contribution, you will say product C is giving maximum contribution, so product C is more profitable. But in this situation, because our raw material is in short supply, we have to see that which product, we have to see which of these 3 products gives maximum contribution per kg of material. If 1 kg of raw material, what is the maximum contribution from which product I am getting? Let us check this. You understand? The meaning here is, once again, if I see the simple contribution, it is 16. C is the most beneficial product for the company, most profitable product for the company. But if we see our raw material is in short supply, we have to see the value of 1 kg of raw material, right? So 1 kg of raw material, if I see from that angle, which product is giving maximum contribution for 1 kg of raw material, because raw material is in short supply. So you can see here this A product, B product, and C product. A product gives me 11 contribution, it gives me 15, and it gives me 16. So how much raw material we are using? Raw material in kg we are using for A. Here 2 kg of raw material is used. Here 3 kg of raw materials is used, and here no, not 3 kg, here 1.5. I think product B is 1.5. And in case of product C, let us check, 3 kg. So 3 kg is used here. So now contribution, this is contribution per unit. So contribution per kg of raw material I have to calculate. So here it will come 11 divided by 2, 5.5. 15 divided by 1.5. How much it comes? It comes 10. Here, how much it comes? It comes 3 5 are 15. Very 3 5 are 15 and 3 2 3 3 are 9. Near about 5.3. So now the picture has completely changed. You can see here, previously we were saying that product C is the maximum contribution giving product or contributing product or most profitable product because its contribution is the highest. But after seeing the contribution per kg of raw material, our answer changes. Now product B is the more profitable product for the company because it is giving us a maximum contribution per unit of per kg of raw material. So in case of key factor questions, you have to please consider this thing into your mind that whatever contribution you are simply calculating, first calculate that, then see which factor is in short supply, which factor is the key factor. You have to divide your contribution, okay, which you have calculated with that factor, with that, say for example, if it is labor, then you have to divide it, how much labor hours are each in each product are used. So this is the concept of key factor. Let us move to our study material. So here you can see profitability. If you want to check contribution, you have to divide by the key factor. Okay. So moving on. Profit balance, this is PV ratio, how they calculate, I have already explained it. Contribution divided by sales into 100. Okay. PV ratio, contribution divided by sales into 100. Now we'll see some questions here. This is break-even analysis. You can see this graph. It is very simple graph. You can understand this is total sales curve. This is total cost curve. Why this is, let me draw it for you. So see here, this is your x-axis, this is y-axis, this is point of origin. Okay, so now if I first of all I draw total sales line, so when you are not selling anything, your sales will be 0. So as you are selling, this will go like this. Okay, this is total sales curve, total sales, and your total cost always starts from here. Why? Because even if you are not selling any if you are not producing any product, your fixed cost will come. Okay, for example, suppose your fixed cost is your company, your factory fixed cost is, say for example 10,000. This is the fixed cost, 10,000 rupees. This is your fixed cost. Okay, and your variable cost, say for example material, for 1 unit it is 5 rupees. Okay, so when you are not producing anything, even if the production is zero unit, at 0 unit, how much your total cost will come? At least 10,000, because fixed cost cannot be avoided. You have to pay factory rent and something, whatever is your fixed cost, even if you are not producing anything, right? So that's why at 0 level of output also, your fixed cost will come at least 10,000. Okay, after that it will start rising. So it starts rising from here. So this is your total cost. Now, what we told you previously, where total sales is equal to total cost. Okay, where total sales are equal to total cost. That point is called as break-even point. So this is a point where our total sales and total cost are equal. So this sides are units and this sides is value. So if you draw a line perpendicular to this x-axis, how many units are here? That will be your BEP in units, right? And if you draw a perpendicular on this side from here, whatever value you will find here, that will be your BEP in values, right? And this area, entire area is a loss, because you can see here your cost is high and your sales is less, and this will be a profit area. Okay, profitable, because here your sales are more and cost is less. Okay, fine, good. And this point is called as angle of incidence. Theory you can study. Again, they have explained the same thing. So I will cover here each and every example for you. Okay. Huh. So let us start with this example, illustration number 2. Okay. I'll check whether we can copy it. Yes, it is copied. Fine. So what they're saying, that they are telling here, Pankaj Limited, engaged in the manufacture of two products A and B, gives you the following information: product A, product B. Okay, the format is little change here because I have copied pasted here. So no problem, we will understand. So this is your product A and this is your product B. Okay. So selling price for 1 unit, it is given 60, 100. Direct material is 20, 25. Direct wages per unit at the rate of 50, at the rate of 0.50 per hour. Okay, so that is 10 rupees it is given per unit. Okay, so direct wages per unit, so we have to take per unit only. So whether they are giving 50 per whatever, it doesn't matter. So here per unit is 10, here it is 15. Variable overheads are given to you is 100% of direct wages. Fine. So it means variable overheads are given. This is variable. This is also variable. Remember this word, variable. 100% of direct wages. So direct wages are given here 10. It means your variable overheads are also going to be 10. And here it is 15. So it will be 15 here. And fixed overheads are given commonly for the entire factory where A and B products are produced. It is given 10,000 per annum, and maximum capacity of the factory is 1000 units. Fine. So now what they are asking, I think half of the question is copy pasted. Yes. Show the contribution of each of the product A and B and recommend which of the following sales mix should be adopted. Fine. So what they are saying here, let me copy it again. So they are saying show the contribution for each of the product A and B. So let us check which of the product is having higher contribution. So there are two products, as you can see. One is product A, one is product B. So how to calculate, as we have our format. First of all, we'll write here selling price. Selling price is given to you in the question. You can see 60 and 100. So 60 for A, 100 for B. Then direct material is given 20, 25. So let us write here all the variable cost. Variable costs. So direct material, it is given for product A, how much it is given? 25, right? 20 and 25. Okay. So it is 20 here, 25 here. After direct material, they have given to you direct labor. Direct labor. Direct labor is given to you, or direct wages are given to you 10 and 15. So it is 10, it is 15, right? And then they are giving you variable overheads. So they are saying 100% of direct labor. So it means it is also 10, here it is 15, right? So this is your total variable cost. Understand? So this is your total variable cost. Fine. Okay. So we can see here, in case of product A, our total variable cost comes 40. And in case of B, it comes 25, 15, 40, 55. 55. So how much contribution we are getting here? Contribution per unit. You can see here, the selling price was 60 minus 40, 20. Here we are getting 100 minus 55, 100 minus 55, 45, right? So as you can see, we are having more contribution here in product B. So obviously product B is more profitable. Okay. Now here there is no question of key factor. Otherwise we have to check. So as the question is silent, now what question is asking? They are giving you three options here. Option number A, B, C. So they are saying if we are producing and selling 300 units of product A and 600 units of B, whether it is out of the three options, which one is more profitable? Okay, so we have to check one by one which product is more profitable by checking each of the given options. So option number A says 300 units of A and 600 units of B. 300, 600. So let us check option number A. 300 units of A and 600 of B. So here it is A, here it is B, right? So we can start like this. We can directly calculate our contribution here. Okay, because product A gives you 20 rupees contribution per unit for 1 unit. So how many units we are going to finally sell? 300. So 300 units of A multiply by contribution 20. Once again, why I have not taken the full format? Because there is no need. When you have contribution, you can start from there. As in the question, it says 300 units are there for A and contribution of A is 20. It means after selling 300 units of product A, the total contribution margin for the firm will be 6,000. Here it will be 600 because 600 units of B are there. And how much is the contribution? Here the contribution is 45. Okay, so let us check how much it becomes. 0, 0, 6, 5 ja 30, carry 3, 6, 4 ja 24, 27. Okay, so it's correct. Okay, so now total contribution, how much we are getting, including A and B. So total contribution here comes 6,000 plus 27,000, right? So it will be 33,000. 33,000 will be the total contribution. From this, we will subtract the fixed cost. How much fixed cost is given to us in the question? They have given to us total fixed cost of 10,000 per annum. So 10,000 is the total fixed cost. If we minus fixed cost, we will get 23,000 of profit. So if the option A is selected, our profit will be 23,000. If we go for B option, B options, how many units are there? 450, 450 for both the products. So for A and B, for both the products, we have 450 units each, you know. So here also we will calculate same total contribution. So 450 into 20, 450 into 20, sorry, 45. So here it will be 9,000. And here it will be 45. We have to check for 450 into 45. How much it comes? 20,250. 20,250. So total contribution will be 9,000 for A plus 20,250 for B. In all, it will be 29,250. If we subtract our fixed cost here, how much is our total fixed cost? Total fixed cost is 10,000. So in this situation, we will be getting a profit of 19,250. So if you compare option A and option B, option A is still better because there our profit is 23,000 and in B it is just 19,250. What about option C? Option C says 600 units of A and 300 of B. Okay. Now we have 600 units of A and for B 300 units. So here contribution 600 into 20, 300 into 45. So it will be 6 2s are 12, 12,000. Here it will be 3 5s are 15, 3 4s are 12, and 1 13. 13,500. So total contribution is 25,500. If we minus, this is total contribution. From this, if we minus our fixed cost, that is 10,000. How much profit we are going to make here is 15,500 only. So this is the least profit out of the three options given to us. So it means option A is the best one, because in option A we are having a maximum profit of 23,000. This, you know why this happened? Because the product which is giving more contribution, like product B, the units are more for that. Okay, so that is why. So now if we see this question, what is their solution? You can see here solution. What comes here? Profit in case of A 23,000 and then B 19,250, 15,500. So option A is the best. Okay, so this is all for today's class. I think I have covered a few portion for your this unit 2, and we will start from illustration number 3 from the next class. Okay, if you like this video, if like, okay, if you don't like this video, please make a comment why you did not like and what improvement you need in this. Okay, so now I'm stopping sharing this. So I hope you understood, and in the further more classes I will try to explain it more clearly. Till then, take care, study well, all the best.